Welcome to our session on the taxation system in Nepal. In this session, we have three main objectives. First, we will identify the types of taxes in Nepal. Second, we will understand the legal framework governing Nepalese taxation. And third, we will distinguish between direct and indirect taxes. By the end of this video, you will be able to navigate the core components of the Nepalese tax structure, understand the legal basis for tax collection, and identify how different taxes affect both individuals and businesses. Taxation in Nepal. Taxation is the primary source of government revenue in Nepal, used to fund public services, infrastructure, and development projects. It is a mandatory contribution imposed by the government on individuals and entities. Let's start by looking at the legal foundation that makes this possible. To understand how taxes are collected, we must look at the rules that govern the process. Our goal today is to understand the legal framework of taxation in Nepal. In Nepal, the authority to levy and collect taxes is derived directly from the law. The Constitution of Nepal states that no tax shall be levied and collected except in accordance with the law. The primary governing bodies are the Ministry of Finance and the Inland Revenue Department, often abbreviated as IRD. The IRD is responsible for the administration of income tax, value-added tax, and excise duties. They ensure compliance and provide the infrastructure for taxpayers to fulfill their obligations. Now that we know who manages the taxes, let's break down the two main categories: direct and indirect taxes. In Nepal, taxes are broadly classified into two categories based on how they are collected and who bears the ultimate burden. First, we have direct taxes. In this case, the person or entity who earns the income is the one who pays the tax to the government. You cannot shift this burden to someone else. We will clear this visualization before moving on. On the other hand, we have indirect taxes. Here, the tax is collected by an intermediary, like a shopkeeper, from the person who bears the ultimate economic burden, which is the consumer. When you buy a bottle of water in Kathmandu, the price includes a tax that the shop will later pay to the government. Now, let's compare the two types. Notice the difference. Direct tax is based on what you earn, while indirect tax is based on what you spend. We will explore each of these in more detail, starting with the most significant direct tax: income tax. Income tax is the most prominent direct tax in Nepal, governed by the Income Tax Act of 2058. It is applied to income earned from employment, business, and investment. For individuals, Nepal uses a progressive tax system. This means that as your income increases, the rate of tax you pay also increases. Let's look at the brackets for individuals. Up to 500,000 rupees, it's 1%. The next 200,000 is 10%. The next 1 million is 30%. And anything above 2 million is 36%. The first bracket is often referred to as the tax-exempt threshold, though a 1% Social Security tax is generally applied to residents. For companies, the system is different. Most businesses pay a flat rate of 25% on their net profit. However, specific sectors like banking, insurance, and petroleum are taxed at a higher rate of 30%. Think of it this way: the government acts as a silent partner in every profitable venture, taking a share to reinvest in the nation. Next, let's look at the most common indirect tax you encounter every day: VAT. Value-added tax, or VAT, is the major source of indirect tax revenue in Nepal. It is a consumption tax levied on the value added to goods and services at each stage of the supply chain. While some countries have multiple VAT rates, Nepal primarily uses a single standard rate of 13%. However, not everything is taxed. Essential items like rice, flour, and medicine, as well as educational and health services, are VAT exempt to keep them affordable for the general public. Exports are zero-rated to make Nepalese products competitive in the international market. The unique feature of VAT is the tax credit system. Businesses can deduct the VAT they paid on purchases from the VAT they collected on sales, ensuring that only the value added is taxed. Ultimately, the total 13% is borne by the final consumer. Now, let's look at another specific indirect tax: excise duty. Beyond VAT, Nepal utilizes excise duty and customs duty to regulate the economy and discourage the consumption of specific goods. Excise duty is an additional tax applied to goods manufactured within the country or imported. It is heavily applied to items like cigarettes and liquor to discourage their use, often called sin taxes. It is also applied to luxury vehicles, which is why cars in Nepal are significantly more expensive than in many other countries. The primary purpose is to generate revenue and protect public health. Because Nepal is a landlocked country that imports a large volume of goods, customs duty is vital. It is collected at border points like Birgunj or Bairahawa. These duties protect local farmers and manufacturers by making imported substitutes more expensive. The calculation is based on the Harmonized System, or HS code. We have now covered the pillars of the Nepalese tax system. First, the legal framework through the Constitution and the Inland Revenue Department. Second, direct tax, which primarily includes progressive income tax. And third, indirect tax, including VAT at 13%, excise and customs duties. From the income you earn to the products you buy, taxation plays a role in every part of the economy. By understanding these structures, you can better navigate the financial landscape of Nepal.